Hello and welcome everyone. My name is Michael Lee and I'm the co-founder of Stock Picks Made Easy alongside with Doug Capehart. This week I'm going to look at the S&P 500 and our outlook for the next 2 weeks and where the market potentially could go. But before we get onto the charts, I just want to share with you some of the education that we've used over the last 20 years to acquire the information that we're sharing with our members and sharing at the moment with our subscribers. Here's a great quote from Jim Rohn. Formal education will make you a living, self-education will make you a fortune. Now Doug and I have lived by this philosophy for many years, probably about 27 years I've been doing self-education, and just to share with you some of the education I've done, here's a look where it all started for myself. You know, I sat in the audience, I've listened to those info commercials with Tony Robbins. I attended Robert Kiyosaki, which was probably about an $8,000 event in Gold Coast, where I seen David Novak, which is a keynote speaker, learning how to do options, and I fell in love with the share market at that time. But I continued my education, acquiring all these different skills. And what Doug and I both found something in common was that they were great education, but the one thing that was missing was that it didn't last. You'd go into these programs, you'd do it for the weekend or 3 or 4 days, you'd be pumped, hyped up, you'd walk away with all these great ideas, and then what? You'd be thrown into the market, you'd be thrown to fend for yourself. But the one major thing that was missing, the element that we found, was the mindset, the psychology behind share trading and investing and making money. So in business, we're taught to succeed, we're taught to always win, we're taught to do our best. But in the share market, it's the totally opposite. What it is, you're taught not to take losses in your business, in your life, and you're constantly achieving to do better. In the share market, if you don't take a loss quickly, it can turn into a big loss and then wipe your account out. And so many retail traders, which is beginners or people that get sold the story about being millionaires and billionaires in a very short time, that I have found has been false. But the reason for that is because they don't share with you the numbers where they lose, right? We can all show you what's winning, we can all show you what's how we're doing well, but the true factor is, to be a successful trader, you need to learn to take losses with no emotion, and those losses are small losses. But we just want to share with you what we found was using all of the elements, using fundamentals, using technicals, and the big key thing that we found over the last few years, 2 or 3 years, is the cycles work, the seasonal cycles and the trends, and understanding what the smart money is doing constantly. So we're going to share with you just a few charts that we did of 2 weeks ago, which was our forecast. Here's a look at the S&P 500. For those that have been following our videos over the last 4 to 5 weeks, we have been saying that we're expecting a sideways movement, which was up here, and we called it just saying this area here, which is in between what we call the trading range, which is just these prices here. So anyone that's new to trading, we want to make it as simple as possible because we understand not everyone understands the terminologies. So we're here with our education, we're here to just show the basics, build upon that information, and do apprenticeship. This apprenticeship is for us is looking at 12 months to 2 years. And the reason we've made this affordable is because you don't even need to risk your own money. Just need to understand the basics of trading, how to invest, and just thrive in life in general. So with this here, you can see the trend line still intact. The way trading works and reading the chart. So anyone new to trading, anyone's new to the technicals of reading a chart, what we're basically looking for is just a psychology for people that, the traders, what the psychology is between traders, their emotions. And what we have here is what we've got is basically a higher low. So if we went back previously in the chart, then we've got a higher high, and then it constantly, each time it's going higher, right? So it's trending up, back, down, going up again, going lower, and we're still in that uptrend, right? So at the moment the market's still going up, and we're still quite bullish. We're not we don't expect the market to collapse like everyone's saying it is right now. We're seeing the market could potentially pull back over the next week or two, but we are still seeing a strong rally coming in seasonally with the Christmas rally. So I just wanted to share that with you this week. So the market's still going sideways. There is a bit of weakness right now in the tech stocks, for example, we have Netflix showing a bit of weakness. We've got Tesla showing weakness. Facebook had a little bit of weakness last week as well. and the retail stocks which had been sold off have actually showed some strength. And getting back to also, if you have a look at the videos from a previous weeks ago, I mentioned just briefly about the Fibonacci Benner cycle, showing that 2010-2021 is like 11-year cycle at the top, and also it's indicating that the highs for the market, or the high for the market, is 2018. Now this is a formula that's been used way back over 100 years. It's been predicting the highs and lows in the market with a fairly accurate time frame between 6 months either side of these highs. Here's a closer look. So I've just expanded and shown you basically what the Benner-Fibonacci cycle is all about. So if we go to it at the top here, what you can see is a 9-year interval, right? So that's between 1991 and the year 2000. Now the year 2000 was a high in the tech bubble, internet bubble that we had. It started about January 2000, and then what we had a fall for that period down to 2002, 2003. Now 2003 around March was the bottom of the market, and then what we see is this interval, right? You have the 10-year to the next period here, which you can see 10-year highs. Now we did have a little bit early in 2007 to 2009, but 2010 to 11 it still had a bit of a recession or slowdown period, and then we've had this explosive growth which we've last seen for the last 7 to 8 years in the share market, and also the property market has improved as well. Now right now you're hearing so much comment in the media about the crash that's imminent, that's about to, the stock market's about to drop 50, 60, 80%. But following these cycles, it's giving us confidence to show that the market is probably still going to stay up. We're going to get that strength. We've got Donald Trump in the moment doing changes. There's a bit, either way, if you love him or hate him, it's just showing that he's trying to put things into place to make a difference. Now 2018 is showing that will be the year that there will be some challenges. And again, if we follow our seasonal cycles, that's likely to occur in the second half of 2018. We're looking probably somewhere around July, August, September. That's when we're probably going to start seeing some volatility in the market really kick in. But we are expecting this year to still be hold up, pull back maybe between 5.5% to 8% from now until about September, October. But then you should expect a strong rally after that. But as you can see, the Fibonacci cycle here is giving us an indication or a forecast of what's likely to happen over the next, even up to this year 2041. So it just shows in cycles. So the way it works, you've got a 16-year cycle at the bottom between these periods here, 1987 to 2003. The next bottom is likely in 2021, and then the next 20-year cycle which goes to 2041. And then up here, similar kind of thing, you've got an 18-year cycle between these two lows, 1995 to 2011. And then once we go through this next period, 18-year cycle, takes us from 2011 to 2021. So it's just a really brief understanding how the cycles works. This is one element of the cycles that we study, but I want to give everyone an overview of our subscribers and those our members as well. So here's a closer look as well at the different cycles using a cycle of 9 days, 18 days, and then larger, grander scales as well. So this is a bit of research or some work we've been following with another cycle studies. Really great demonstration of how it all works. This is showing resistance at the level using Fibonacci retracements. Again, if you're not familiar with it, that's fine. It's just there's retracement levels. Key ones are 38.2 Fibonacci retracement, a 50% retracement, and also a 61.8 retracement. And so just our forecast for the next probably week to week and a half, we are seeing some weakness coming into this market again. There's been really big up and down days. You can see these big bars getting some volatility into the market, which is good for traders. And then if we look at these cycles which we're showing here, that's a 9-day cycle, then it goes to another 9-day cycle, and then an 18 trading day cycle. We're seeing that this cycle is going to come in, as you can see around there, probably about the 14th, somewhere between the 12th, 13th, 14th of July. So we're expecting this market just to head down and test, which is here, around the level of say 23.90. That's what we're seeing. If it breaks above this other level here around 24.54 now, we are seeing the strength coming in, but we are seeing we are expecting a bit of pullback in the market, opportunity to start do some buying middle of July, but we'll keep you posted. So let's have a look at our results from last week. As a special bonus, 2 weeks ago on our weekly outlook or market outlook in June 19th, we actually looked at it. We gave you a few stocks that we were looking at, where we thought that we were going to go based on our cycles work. Here's our first forecast. We did Celgene Corp. We showed you with the arrows. We put in our levels here where we thought it may get to. If we get in the trade, we were expecting the market go like this and then start coming back. So we had our target price up here at 135. So we're fairly happy with the results there. That's exactly what it did. So you can see this is what we had the area there based on our previous charts. The stock rallied straight up, tested our 135 and then come back down. So that was one that we got right. Let's have a look at the other ones that we had forecast on. So we had another one which was RPC, or trading symbol RES. Now this one we had expected to probably move higher. It was establishing at this point here, which we talk about, a higher low, started creating a new channel which is a higher high there, higher low, higher high, and it continued, right? So that pattern was showing a nice form for it to continue to that 23 mark. So we did get this one slightly wrong, but we didn't get taken out. So what happened, we had our target or stop loss zone of 1851, it got to 1855, and now it's continued back up. So we are still seeing confidence for this to go higher, because these higher lows and higher highs are intact. So the next level we want to see is get up to here. But again, we probably, I would say we got this one wrong. Not exactly right, but we got that one wrong. Let's have a look at the next one that we gave as a forecast. So we had Intel. We were expecting it to pull back down and then move higher. We had a stop loss zone of 33. This was again based on our cycles work that our members get to see. So again, we slightly got it wrong, come down, it's still intact, the trade's in place. So if we get a bounce this week in the NASDAQ or the tech stocks, we expect this to go okay. But yeah, not holding up too much confidence in this one, but that's part of trading, right? Understanding, just doing your research, going with it, backing it up, and follow money management rules. Let's have a look at the next stock that we had for 2 weeks ago. So this was Snipes Networks. This one here, we're expecting it to actually just bounce a little bit. Now anyone listening from last week, we call this a death cross, which is an indication that comes up. It's where the 50-day moving average and the 200-day moving average cross and showing the momentum's change from a positive trade or positive stock to a stock that actually could be changing direction and reversing into a downtrend. So let's see how this one formed over the last 2 weeks. So again, it's followed the cycles work. At this stage, it's gone what we said. We had an entry level in at this price here. So we're now in this trade, and we'd like to see it end down here within the next 2 weeks by about the middle of July or late August. So far that one worked out okay. And then this one, the last one, 5. Now 5 is one of those stocks where we had last week we had a rally in the retail stocks when all the tech stocks were being sold off. So one of the stocks we actually do like, which is 5, actually looks like it probably have further strength to the upside. So we may change this trade. We're not quite in it with our entry levels, but we're just going to look at what it's done. One of the one we do like for the long term at the moment is probably Sears. Now it was up 28% for the week last week, and we probably have this. We'll have the Sears as a buy at around $8. So if it pulls back down, we say that could be a good buy entry at about $8. So let's just have a look how we went with 5 as well before we ended out for the week. Always we try to keep short videos, probably no more than 15 minutes. Like to have them probably about 5 or 10, but this week was a little bit longer, showing you the results. So you can see it's the cycles work kept us in this trade in terms of where our entry was. So we've got our entry here at $50. We probably I think we got executed on this trade on Friday. I think it was $49.85 was our entry level. And so we are seeing that this one could continue higher because the retail stocks have actually showed a bit of strength. And then what we look for, another indication, is momentum here. If you can see down the bottom, that's the MACD, which means the momentum has turned positive and it could continue to the upside. So that's just a look at the performance that we did previously. Just again a recap on our view for the next 2 weeks for the S&P 500. is we are expecting a little bit of weakness, probably pulls it back to a target around 23.90. But I'd also like to mention that the DAX, or the German and the UK, their Federal Reserve, or the Reserve banks in England and also in Germany, have actually mentioned that they're not looking at doing any more stimulus packages. So there could be an end to the free printing which has been happening in Europe, and they are looking at raising interest rates. So that could be a good indication that you'll see some weakness in the sector in the UK and also in the DAX. So you should see further pressure on those indices. The US will probably follow for that period of time, and then if we do not see another rise in by the Feds by the end of this year, that also could have a bit of a panic in the market leading up to Christmas. So that's our review for the week. I hope everyone's enjoyed it. Any questions, that we always do appreciate your feedback. There was also mention about the volume, so please let me know if the volume's still low. I have tried to improve on the quality of the audio for this week. So also, if you want to just check out our website, you can go to our link here, which is www.stockpitsmadeeasy.info. Now, we're offering this education to teach people to be apprentice traders. Don't even trade with your own money. Learn with your emotion. Learn how to trade using the psychology that's needed to be successful. This is not a get-rich scheme. This is not like it's going to happen over a week or a month or two. This is doing an apprenticeship or going to university or going to college. It will take 3 to 4 years to perfect your arts. Mastery is about doing things over and over again. To a level that they say doing it 10,000 times. Right? So it will take you about 3 to 4 years. It might seem a long time, but look, if it's $1 a day, that's a cheap education to really get your skills to be a great successful trader. So thanks for watching. We look forward to hearing your feedback, and we'll talk again in a couple of weeks. Have a great weekend and enjoy the week. Now, bye for now.